Hi, grade 12s. Let's quickly have a look at question 3 of the March 2025 paper. So this question was specifically about the cash flow statement and the interpretations thereof. This question was 25 marks and the learners had 25 minutes to complete this question. Okay, so let's have a look at the information and the questions. So the name of the company is Oki Limited. Now, Limited we know refers to a public company. The information below relates to Oki Limited. Let's quickly go through all of the questions, guys. I would suggest that when you do that or when you start answering your test, is that go through all your questions and then you know exactly when you go through your information, you would know what information relates to which specific question. Okay, so 3.1.1 is calculate the following figures that will appear on the cash flow statement. Your income tax paid, so the actual cash outflow on an income tax that was paid for 4 marks. The fixed assets purchased, once again purchased, that will be a cash outflow for 5 marks. And the net change in cash and cash equivalents, which will be 4 marks. And this is obviously then the difference between your cash balance at the beginning of the year and your cash balance at the end of the year. Okay. Then 3.1.2, complete the section of the cash flow from financing activities in the cash flow statement. Okay, so that is important. So financing activities, guys, financing activities. Now, to make this easy for you guys, please always do this when they ask you to complete a section of financing activities. Just go and write for yourself that financing activities, I have to look for 2 things in the information, right? I have to look for all information and balances that relate to loans, okay? My loans, increase or decrease in loans, and then also the repurchase or the issuing of shares. Okay, so that is the thing that you do when you see that you have to answer your financing activity section of your cash flow statement, your loans and your shares for 6 marks. Okay, then we go to 3.1.3, calculate the following ratios. Guys, very important, right? Let's just have a look here. They use the word calculate. Okay, not comment, not calculate and comment. Okay, so please, 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 don't waste time when they only ask you to calculate. Okay, but let's have a look at the first ratio that they wanted to calculate. It's net profit on sales. Net profit on sales for 3 marks. Okay, so your net profit on sales, and this is then it's logical, right? Because they basically tell you what the components of the ratio is going to be. You'll take your net profit from your income statement, you will put it over your sales from your income statement, and you will multiply it by 100 to get your percentage, and there you have 3 marks in the bag. Okay. Then with your debt to equity ratio, it's also just calculate, guys. So remember, your debt is your long-term debt, okay? Not your current liabilities, only your long-term debt. And then your equity is obviously going to be your shareholders' equity. And then that is also going to be your 3 marks. Okay, remember that you always have to make your right-hand side of your ratio, you have to make it 1. And then that is the simplified version of this ratio that we want. Okay. Now that we know everything that is asked of us, let's have a look at the information. Information A, extract from the income statement for the year ended 28 February 2025. So guys, this is the income statement, okay? The income statement, that is obviously our income, our expenses, and then our tax and profits. So for the year ended 28 February 2025, okay? So please remember that when we see our year end, because they did not provide us with the year end during our questions, so and they also did not specify in our questions what information we need to use. Okay, so therefore we have to scan through all the information and then use the information as needed for our questions. Okay. So once we see our financial year end, guys, what do? We have to write the start of our financial year. So that then means the start of our financial year is going to be 1 March 2024. Okay, so 1 March 2024, and then that goes all the way to 28 Feb, 12-month period ending 28 Feb 2025. Okay, so there is my financial year for reference purposes. Okay. Then we have to have a look at what they provide us in our income statement. They provide us with the sales. We know that we are going to use the sales amount, obviously, and substitute it into this ratio over here. Our depreciation, guys, we know is going to be used under our fixed assets over here to calculate our fixed assets purchased. And then we have our net profit before tax and our net profit after tax. Either one of those two can be used to as your net profit, right? Because they did not specify net profit before tax or net profit after tax. So you could have used a net profit, you could have used net profit before tax of 1.4 or net profit after tax of 1,036,000 in this specific ratio, and you would have gotten your 3 marks. Okay, so read carefully. If they just say net profit, you can use either one of the two. They can say net profit before tax, net profit after tax. Just read that carefully. Okay, and then our debt to equity ratio. We know debt is our long-term debt and our equity is our shareholders' equity. Okay, we also know that the income tax of 444,000 Rand, that will be then under the income tax paid, the cash flow, the cash outflow for the payment of income taxes. We are going to use that in that calculation. Okay, so basically we are going to use everything in the income statement provided. Then the figures from the balance sheet and the notes. Guys, it's very important to look at your dates over here. So this is 28 February 2024. So these are our opening balances. Guys, this is very important. You cannot get confused. I have seen learners that use the right-hand side as the closing balances and the left-hand side as the opening balances. So please just always go and make sure that you have this correct, okay? Especially with the cash flow and also with your ratios. Okay, so the right-hand side is will be our opening balances, and the left-hand side will be our closing balances. So they give us our fixed assets at carrying value, guys. This fixed assets opening balance and closing balance will be used for fixed assets purchased. And then we have financial assets, which is blocked out. Then we have our current assets, guys, which consists of SARS income tax. And then we have our cash and cash equivalents. Now, obviously, your SARS income tax, can you see that for the current year, we have 0. We don't have SARS income tax is not a current asset for the current year. It was a current asset in the previous financial year. So the opening balance of SARS income tax was a receivable because it falls under current assets. Can you guys see that? So that is very important to note. So you'll see that we have 2 SARS income taxes, right? We have one under current assets, and then when we go down, we also have one under current liabilities. Guys, this is just because our opening balance of 29,950 was a receivable from SARS. That's why it's under current assets. And then our closing balance of SARS income tax of 33,900 for the current year is a liability. It's a payable. Okay. So these two, the opening and the closing, guys, these two amounts are then a receivable opening and a payable closing. Okay, very, very important to note that, and that's the reason why we have 2 SARS income taxes. Okay, if both of them were receivables, we only would have had 1 SARS income tax, and then the closing balance would have been here. If both of them were liabilities, then we only would have had 1 SARS income tax with the closing balance and the opening balance over here. So please don't be stressed out when you see two SARS income taxes. It's just because the one is a current asset and the other is a current liability. Okay, so that will be used under or to calculate your income tax paid. Okay, then we have our shareholders' equity, for which they actually total that for us, and we know that we are going to use the shareholders' equity for our debt to equity ratio. Then we go to our non-current liabilities. They give us the opening balance and the closing balance, guys. That is our long-term loans, and that will also be used for our debt to equity ratio. And then we have our current liabilities, which is our SARS income tax, and then our bank overdraft. Okay, guys, it's very important to look at this as well. At our cash, let's just use red then. You will see that over here we have cash and cash equivalents. And then when we go down, we have a bank overdraft as well. So that's once again because this bank overdraft was our opening bank balance, right? Can you see 129,720? It's in the opening balance column. So we had a bank overdraft at the beginning of the financial year, right? But at the end of our financial year, when we look at cash and cash equivalents, can you see that the cash and cash equivalents is then under current assets? And that then means that we have recovered from a bank overdraft to having a positive bank balance of 18,250, guys. So that is very important to understand. Okay, then we get to information number C, which is our share capital and dividends. Guys, we already know what we are going to use this information for, right? We are going to use it for 3.1.2, right? Which is our financing activities, right? Anything relating to shares will be under financing activities. Okay, perfect. And then number D will be our fixed assets. And then we know we are going to use our fixed asset information to get the cash paid for fixed assets purchased for those 5 marks. So we know after scanning through the question and through all of the information, we basically know where all of the information is going, and we can start answering the question. Okay, all the questions. Now let's have a look at the first question, which is then going to be 3.1. Now at 3.1.1, they want us to calculate the income tax paid. Okay, income tax paid. Now, please, guys, there are more than one option. You can use the format as per the book, or you can just write down amounts with the correct signs in front of them, either in brackets, positive or negative amounts, and you can get your answer. But I'm going to go, I'm going to explain this from the approach that some of you struggle with accounting. And with the cash flow statement, a way to always get your marks over here is to study your formats. Guys, there are formats for income tax paid, for fixed assets purchased, for cash and for your net change in cash and cash equivalents. Everything is formats. So please go and study your formats. You will get all of your marks. You can get 100% for cash flow statement if you understand your formats, okay, or the working of the cash flow statement. So let's get going, guys. When you study in your book the specific format to calculate your income tax paid, you know that the first thing that you have to write down is I need to write down my opening balance. Okay, my opening balance, right? Okay, that is the first portion of my format. Then I know my income tax for the current year is, guys, and this is always going to be the case. So just study this format and then you know what to look for. So your income tax for the current year actually from your income statement is next. And then you will have your closing balance. Guys, this is how easy this is. This is really how easy this is. You just study this format and you write this in here. Okay, there aren't any blocks or whatever, but this is the format that you know. So you write the format, you make it work within the space provided. Now you just go and have a look. Okay, so your opening balance, guys, your opening balance you always have to go and have a look at whether it is a debit balance or whether it is a credit balance, i.e., whether it is a receivable from SARS, the tax, or whether it is a payable to SARS. Now, when we go up to our information, guys, and when we have a look at our opening balance, right? Let's see. Our opening balance is over here. Let's just highlight it. SARS income tax. It's under the opening column. So it's 29,950, guys. But look under what heading it is. It's under current assets. That means that it's a receivable from SARS, the 29,950. It's a receivable. Now, please be very careful with your income taxes. Listen carefully and make the notes. So, when your opening balance is a receivable, let me write it here. So when your so that you can make the note. So when your opening balance, right, is a receivable, when it's basically under current assets. Okay, so when it's a debit balance, okay, they can say it's a debit balance, or they can show it as they do it over here. They can say it's under current assets. Okay, when your opening balance is a debit balance, or when it's under current assets, or when they say it's a receivable, right, then your opening balance has to be in brackets. Okay. The other way around, if your opening balance is a payable, right? So, or if it is a credit balance, right? Or if it is under your current liabilities, okay, when it's under your current liabilities, okay, then there's no bracket and it's going to be a positive amount. Okay, so please remember this. Okay, so that is very, very important. So if your opening balance is debit, it's in brackets, or when it's under current assets, or when they say it's a receivable, it will be in brackets. But when it's a credit, or it's under current liabilities, or when they say it's a payable, then it will be a positive amount. Okay. Then your closing balance, let's just do your closing balance. Guys, your closing balance will be deducted. If it's the opposite of your opening balance. Okay. So it's the opposite of your opening balance. So when it is a credit, right? Or when it's under current liabilities, okay, we will have to subtract it. Okay. It will be subtracted, okay? And then when it's a debit balance, or if it's obviously a current asset, it will be a positive amount. So guys, this is how easy this is, but this is something that you are going to have to put into your notes and that you have to study, because this will be the actual make it or break it in terms of getting this correct in your test. Okay, so please go ahead and study this. So let's have a look at our opening balance. We know that our opening balance is a current asset, right? So our opening balance is a current asset, so we are going to have to put our opening balance in brackets. Okay. So we are going to have to put our opening balance in brackets. So let's do that. So we are going to put the 29,950. We are going to put that in brackets. Okay. Then our income tax for the year will be a positive amount. So let's go and get our income tax for the year from our income statement. And that is, then you can see that the amount of your income tax for your current financial year from your income statement is 444,000 Rand. Okay, so this is then the current year expense, and this amount will be a positive amount. So the current year expense will be a positive amount. So you write in your 444,000 positive amount. And then your closing balance, let's go have a look at our closing balance and with our rule over here. So our closing balance is under current liabilities. And remember, if it is under current liabilities, it will be in brackets, and it is under current liabilities. So the 33,900 will be in brackets. Okay, so the 33,900 will then be in brackets. Okay, perfect. There we go. So now you just take your calculator, guys, and you calculate your final answer for your income tax paid. So your opening balance, you're going to say negative 29,950. You're going to add 444,000 Rand to it, and then you are going to subtract the 33,900 Rand, and then you are going to get 380,150 Rand. Okay, and then you write that in your answer column over here. So you're going to write that the answer then, the actual cash movement, the cash that we paid for the current year in terms of taxes is going to be 380,150 Rand. And there you have your first 4 marks in the bag. Guys, can you see? It's not difficult. You just have to know this one principle over here that I had shown you guys over here. This is something that you have to study, okay? Yes, you have to know this. Your income tax in the middle is a positive amount. Just know that it's opening balance plus your income tax and closing balance, and then you will get your answer for your income taxes paid. Okay, perfect. All right, guys, and then the reason why we work with these brackets and positive and negative amounts, this is because we want the movement between our opening and our closing balances. Okay, so the movement between these balances depends on whether it was debit or credit, right? And we want the movement which will give us the amount that we had paid. So that is why it's very important to study the brackets or the no brackets, the debit and the credit balances of the opening and the closing balances. Okay, perfect. So there we have the answer for 3.1.1. Let's move on to fixed assets purchased. Okay, so now they want the fixed assets that were purchased. Okay, so the fixed assets that were purchased. So once again, guys, this is also going to be a format that you need to study. So you need your opening balance of your fixed assets, right? So let's go up and look for let's just highlight what we had used. We already used the SARS income tax of 33,900 Rand as well. So now when we go to our fixed assets purchased, once again, it's going to be a format, right? Just like the format we had over here, we are going to have to study a format, right, that we can use to get fixed assets purchased. And the first thing, once again, is going to be an opening balance. But this is going to be, there's going to be a bit more. So let's try and write this a bit smaller. We're going to have more entries in this format. So we are going to say opening balance. So we're going to need our opening balance, guys. And remember the balance that is provided. Let's just quickly think logically about this. The balance that is provided over here on our balance sheet. Let's quickly look here. Can you see here is our fixed assets, right? But look what they say. They say fixed assets at carrying value, right? So what does carrying value mean? It means cost less accumulated depreciation. Okay, that is very important. So this might actually be different. You have to read very carefully, right? They could either say fixed assets and then in brackets carrying value, or they can give you fixed assets at cost, and then there will be another line which will have accumulated depreciation under that. And then you have to subtract these two from one another. But over here, the fixed assets is at carrying value, which means they already subtracted the accumulated depreciation from the cost. That's what carrying value means. So therefore, when we use the opening and the closing balances, right? When we use this opening balance and this closing balance, we know that it is carrying value. We have to go and subtract our depreciation when we make adjustments to the fixed assets. So we want our opening balance of 4,005,300. This is our format. We start with our opening balance. Okay, let's go ahead. The opening balance is 4,005,300. That's our opening balance. Let's write that down. So the opening balance is 4,005,300. Okay, that is our opening balance. And remember, this is at carrying value. So the depreciation is already subtracted. Okay, the accumulated depreciation. Okay, guys, then you basically have to think about your movements. Okay, basically think about your note number 3, your fixed asset note. You have your opening carrying value. That's the first section. What is then in the middle section? It's our movements. What happens in our movements, right? We have to go and read. Did we sell any assets at carrying value, or did we purchase any assets? Okay, so that is what is going to happen next. You have to read your information very carefully. Okay, so let's just quickly go ahead and read our information in terms of fixed assets, right? What do they say? What happened to assets? They say additional fixed assets were purchased during the year. Guys, we know that additional fixed assets were purchased during the year. Why? Because they are asking fixed assets purchased. That's actually what they want. Now they just tell us that there is going to be a section which says fixed assets purchased. So let's go ahead and write fixed assets purchased. We know that is going to be a line in our calculation because fixed assets were purchased. So we have to write that we know that there were assets that were purchased, right? Fixed assets that were purchased. Okay, that is what we have to write over there. Okay, we don't know this amount, so we are going to leave this open. This is going to be a balancing amount, but we know that fixed assets were purchased. Okay, then we have to go back to our information, and what we have to do then is we also have to go and subtract our depreciation for the whole year. Okay, we have to take our depreciation for the whole year, guys, and we have to go and subtract our depreciation. Now we have to think very carefully over here, guys. This depreciation of 552,400, this is the total depreciation for the year. So that means that it will include the portion of the depreciation that we purchased during the year. Do you understand that? So there's no need to worry about depreciation on this purchased assets. Do you agree? Because it's already included in my total depreciation for the year. So the depreciation, when you think about your fixed asset note number 3, what do we do with depreciation for the year? We subtract it. So that's exactly what we are going to do in our format. So we are going to take our depreciation of 552,400 and we are going to subtract it. So you are going to write that depreciation is part of my calculation. What do we do with depreciation? It reduces, right, our fixed assets. So it's 552,400 Rand. Okay, that was our depreciation, 552,400. Perfect. So there we have our depreciation, and we know depreciation has to be subtracted. Okay, what do we also read in terms of fixed assets? What do they also say? They say that equipment was sold at carrying value for 495,000 Rand. Okay, So guys, because the opening balance and the closing balance is given to us at carrying value, we have to take out any fixed assets at carrying value as well. So because we sold equipment at carrying value, we have to subtract 495,000 rands worth of equipment. So we know anything that was sold has to be subtracted at carrying value. So we are going to subtract the 495,000 rand. So then we have, I'm just going to have to write this very, very small. So sold, because it's sold, guys, it's also going to reduce my fixed asset balance. So it's going to be 495,000 rand that we are going to subtract as well. Do you understand? Okay. Then the last thing, guys, that we need when you think about your PPE note number 3, sorry, fixed asset note number 3, it's your opening carrying value. Then you have plus your purchases, right? Plus your purchases, which we don't have. We need to calculate our purchases, right? That's the question. Minus your depreciation, minus your sold at carrying value. And then at the end, we have our closing balance. Okay, closing balance, which is obviously going to be our closing carrying value, guys. And that is then given to you, right? Your closing carrying value is given to you as 4,220,000 rand. 4,220,000. So we can go and write that in. Okay, so our closing balance is then going to be 4,220,000 rand. So there we have all of our information, guys. Our opening carrying value plus purchases minus sold minus depreciation gives you your closing balance. So can you see that they want the fixed assets purchased, right? So the question mark will be there, and then you're going to have to calculate the balancing figure will then be your purchased, right? So once again, you are going to be calculating this missing amount over here. So basically, you are just going to say, you can work from the bottom up. So you can say the 4,220,000 plus the 495,000 plus the 552,000, and then minus your opening balance. That will give you your balancing amount over here. So quickly start at your closing balance, and you are going to say 4,220,000 rand. Okay, remember we are working from the bottom up, so we have to do the opposite signs, right? The opposite working. So you have to add this, and you have to add this, and you have to subtract that. Okay, so it's 4,220,000 now plus 495,000 plus 552,400, and then minus your opening balance of 4,005,300, guys. And then when you do that, you will get your balancing figure of let's write the answer. Guys, remember that this balancing figure, you can do it exactly as I did it over here. And then your final answer is going to be 1,262,100 rand. Okay, that is then your 5 marks for fixed assets purchased. Okay, this will then be at cost. Okay, you guys understand. So this is a bit difficult, but my clue to you is, or the principle that you're going to use is, you have to think about the format of note number 3. Okay, think about your fixed asset note, and then this will help you. Okay, and then whatever they are asking, fixed assets purchased or fixed assets sold or opening balance or whatever, either one of these line items could be a question mark, but then you need to have all the other information, work from the bottom up and do the opposite signs or the opposite workings, and then you will get your missing figure. Okay, So that is then very important to calculate your fixed assets. All right, then the next question is to calculate the net change in cash and cash equivalents. Guys, now the net change in cash and cash equivalents is just the difference between your balance at the beginning of the year and the balance at the end of the year. So you can see that the format over here was given to you. But once again, they don't have to give you this format, right? You have to know that to get the net change in cash and cash equivalents, what do I need? I need the balance at the beginning of the year. I need the balance at the end of the year, and the difference between the balance at the beginning of the and the end of the year will give me the net change in cash and cash equivalents. So once again, format is very important. Format is given. So let's go and get the balance at the beginning of the year from our information. Okay, so the balance at the beginning of the year, okay, for cash and cash equivalents, let's have a look. Okay, so, okay, let me just, I didn't explain this portion previously, but you will see that cash and cash equivalents, you will see, I did not talk about this 22,600 and 5,000. We actually did have our cash and cash equivalents, which is not only our bank account. Do you understand this? There are other cash and cash equivalents as well. That is not just our bank account itself. So this is also very important to note that we have to play off these two amounts against one another, right? So we had a bank overdraft of 129,720 Rand, a specific bank account that was in overdraft, okay? But then we had other positive bank accounts as well. So it's very important for us, guys, to be on the lookout for this. I omitted to explain this previously, so just quickly listen to this. So can you see in our opening balance, look here, guys, we have cash and cash equivalents as an asset, right? A positive balance in these bank accounts. But then we also had a bank overdraft. Okay, so guys, all we need to do over here to get our opening balance, it's very important to use both of these amounts, right? We need one balance, right? We currently have two balances for cash and cash equivalents, or for cash at the beginning of the year. All you need to do is you need to get the difference between these amounts for the one balance that we need. So you know that your bank overdraft is a negative bank balance, right? So in your calculator, or you can actually go ahead and show the calculation over here. So you are going to say negative 129,720. So quickly show the calculation to the marker over here. So at the beginning of the year, we have a negative 129,000. What was the hundreds? 720. 129,720. Okay. We had, that was a negative amount, right? That was a bank overdraft. So therefore you make it a negative amount. But we only want one balance. So therefore we have the negative portion, our negative bank account, and then we play it off against our positive bank accounts, which is 22,605. So you are going to write positive plus, right? 22,605. And that is going to be your calculation for the balance at the beginning of the year. So guys, please, that is what you do when you have two balances. One balance under current assets for cash and cash equivalents, right? And then one balance under current liabilities. All you do is you just say negative 129,720 plus 22,605. Let's quickly get the answer for the opening balance. So it will be negative 129,720 plus 22,605. And then you will get your opening balance. It will still be a negative amount, guys, so please put it in brackets. It will be 107,115. okay, in brackets, right? Because the bank overdraft was more than our positive bank accounts, right? So the answer, the opening balance remains in overdraft. Okay, the net effect remains um, a liability. Okay, then we need our balance at the end of the year. So let's quickly go and get our balance at the end of the year. So here we have cash and cash equivalents. Balance at the end of the year is 18,250. That's under assets, so that's positive, right? And then we don't have a bank overdraft at the end of the year. So we only have an 18,250 asset balance at the end of the year. So here we can write 18,250 positive, right? So can you guys see? Now, I've seen learners make this mistake many times. Guys, this is a negative amount and this is a positive amount. Let's quickly just focus for a moment here. So you always, guys, you have to think about what happened to my cash if I went from a negative balance to a positive balance, right? That means that I made up all of this money over here, the 107,115. I had to make all of that money to get my bank account to zero. Do you understand? So then I had this inflow of money. So you have to say your 115,000, okay? You have to say that amount. We had to receive all of this money to get our bank account out of an overdraft, right? So, and then you have to add from a zero bank account, okay, making all of this money right back, and then from zero to positive 18,250. So you have to plus 18,250, and then you will have your final change in cash and cash equivalents of 125,365. Okay, guys, so please, this is another principle that you have to be careful of. You don't say negative this, positive this. You will not get this correct answer. You have to think, what happened with my cash if it was negative and now it's positive? We had to have made all of this money right back. So this will be a positive 107, 115. That would have gotten our bank account to zero. And then from zero to positive 18,250, which means it was all a cash inflow to get us out of trouble and into a positive that. So that is why this total amount of 125,365 is all the cash inflow. So think carefully about this next time, please. Okay, and that was your 4 marks for the net change in cash and cash equivalents. Okay, perfect. Then we can move on to 3.1.2. And this question asks us to calculate the cash flow from financing activities. Now they had completed the first portion of the cash flow from financing activities for us, which is the proceeds from shares issued. Okay, we know that anything that relates to shares, when we issue shares, we will put the amount in here, which they already did for us. Proceeds from from shares issued. This means that we received 1.2 million rand in cash for selling shares to the public. Okay, so this is a cash inflow, and that is why it is a positive amount. When we issue shares, it's a cash inflow and it's positive. Now let's go and read what else happened to our long-term loans and also to our shares. Okay. Now we can quickly go ahead and we can read about our shares over here. Share capital and dividends. They say new shares for 1.2 million rand were issued during the year. Guys, yes, we just checked our format. Our new shares that were issued, that means that we received, the public paid for these new shares. This is a cash inflow. It's already on my format. Okay. Then they say 80,000 ordinary shares were repurchased. Okay, repurchased, guys. The company repurchases its own shares. So the company will pay the shareholders to repurchase their shares. And that is why a share repurchase will always be in brackets. Please remember that. It will be a cash outflow. So guys, a share issue will always be a cash inflow. Okay. And then a share repurchase will be an outflow. Okay. So you can write over here that we have our share repurchase will be an outflow, right? That will be in brackets. Okay. So you can immediately go and write over here, because it is a share repurchase, we know that the amount that we had paid to repurchase these shares will have to be in brackets. Okay, now let's read further. They say this happened on 1 January 2025. So 2 months before our year end, we repurchased shares at R1.75 above the average issue price of R4.30. Guys, now please don't be confused. We need the total repurchase price. Okay, so please, with the cash flow statement, you need the total repurchase price. Okay, you need the total repurchase price, guys. So you take the number of shares repurchased. How many shares did we repurchase, or did the company repurchase? They repurchased 80,000 ordinary shares. So that's going to be the first part of your calculation. You're going to say, okay, how many shares did the company repurchase? So you're going to show, okay, the company repurchased 80,000 shares. Okay, how much did they pay for each share? And we know that we have to multiply this with the total price, the total repurchase price. And how do we get the total repurchase price? You take your average issue price of R4.30 and you plus the premium that they paid on these shares. So you have to add the R4.30 plus the R1.75 to get your total repurchase price. Okay, so when you say R4.30 plus R1.75, you would get that the total repurchase price was R6.05. So you're going to multiply that with R6.05. Okay, now when you say R6.05 times 80,000 shares, that will give you an amount of R484,000. Okay, so that means that the company spent R484,000 on the repurchase of 80,000 shares. That is why it's a cash outflow and it's in brackets. Now you would see that there's another line, guys, but please always go back to your principles over here. You said, okay, financing activities is one portion shares. We just had a look at all of the shares, okay? Let's just quickly read this last bullet over here. 720,000 shares were in issue at year end. This is just to confuse you guys. They just said that this is the number of shares that we had in issue. This has no effect on any of our calculations. They are just telling you that after this new issue of shares and the repurchase of this, that we had 720,000 shares in issue that are in the hands of the shareholders. Do you understand that? That's all that that tells us. Okay, so we are done with the share portion. Do you understand? So you can go and show yourself we are done with the share portion, the share effect on financing activities. Now we need to focus on the loan portion. Okay, now when we go down to our loans, you just have to go and look at the opening and the closing balance of your loans. Okay, so your non-current liabilities, you can see your long-term loans are your non-current liabilities. Now, this is probably something that most of you would have forgotten, but you have to go and look at the change in your balances of your long-term loans. Okay, so you have to go and remember that you have to write the effect of your loans as well. Okay, so you have to go and look at the effect of your loans. So let's have a look at what happened to our loans, guys, because we have to know if this was a cash inflow or a cash outflow. Did we obtain more loans, take out more loans? Remember, when we loan money from a bank or a third party, they provide that money to us. Okay. So when our loan balance increases, can you see it was 4.2 million? Now, at the end of the year, it's 4.8 million. Can you see that our loan balance had increased? Okay. So when our loan balance increased, it means we borrowed more money, so we received that money, right? So that is then a cash inflow. So we can see when our if our opening balance has increased, when our closing balance is more than our opening balance, it means that it's a cash inflow, basically. Okay, so this will be a positive. This amount will be an inflow because our balance has increased. Okay, now we just have to go ahead and we have to go and make our bracket and show our calculation. And that would be 4,828,200. Okay, so you write that over here. So it's your 4,200, sorry, not 200, 4,800, let's just fix that. 4,828,200 Rand, right? That's our closing balance. From that, we will subtract our opening balance of 4.2 million Rand. Okay, once again, the opening balance is less than our closing balance. That means we had borrowed more money. It means it's an inflow. And the difference is then 600. It's going to be a positive. It's an inflow. 628,200 Rand inflow. Okay, very important. So now you have all of your columns or your rows completed. Now the total cash flow from financing activities, you just quickly add up all of your inflows and your outflows. So it will be positive 1.1 inflow of 1.2 million less the outflow of 484,000 plus the inflow of 628,200 Rand. Okay. And then that will give you your cash flow from financing activities. The total will be 1,344,200 Rand. There you have your total cash flow from financing activities. All right, let's move on to the next question. And this is the final part of this specific question. So now this gets real easy. They ask you to only calculate your net profit on sales. Now, once again, you can either use your net profit before tax, right? You can either use your net profit before tax of 1.4 million, or you can use your net profit after tax of 1,036,000 Rand. Okay, please remember you can use either one of these two, but I'm just going to use the net profit after tax. Okay, so I'm going to use the net profit after tax of 1,036,000 Rand. Let's quickly write that down. We are using the 1,036,000 Rand. So it's the 1,036,000 Rand. Okay. And it's going to be over, guys. The on means it's going to be on a fraction, right? So net profit as your numerator and your sales as your denominator. So what is our sales amount? The sales amount is then going to be sales is 5,180,000. Let's go put that in our formula. So it's going to be over 5,180,000. We have to remember that net profit on sales, the answer of this has to be a percentage. So we have to multiply it with 100. Let's quickly calculate. So it's 1,036,000 divided by 5,180,000. Okay, and then obviously we just multiply that by 100 to get our percentage, and then our answer is going to be 20%. Okay, guys, now when you use your net profit before tax, you would have gotten 28.6%. Either one of these answers would have actually given you your full marks. Okay, so that was nice and easy. Then the next one, the last 3 marks, is calculate the debt to equity ratio. And we know that the debt to equity ratio is a left and right hand side calculation. So once again, your debt will be on your left-hand side and your equity will be on your right-hand side. So let's quickly go and get our debt. Remember, this debt, please, guys, this debt is your long-term debt. It's your non-current debt. So don't add your current liabilities. It's only your non-current liabilities. Okay, so let's go get the non-current liabilities at the end of the year. What is the non-current liabilities at the end of the year? Your non-current liabilities at the end of the year is 4,828,200. Okay, so we are going to write that. So it's going to be 4,828,200, right? Okay, that is our long-term debt. And then our equity, let's go get our equity. Our shareholders' equity also was given to us. There it is, right? Shareholders, we just got our non-current liabilities of that. And that has to be in relation to our total shareholders' equity of 8,047,000. So it's 8 million. It's going to be 8,047,000 rand. Okay, then we know, guys, that the principle is that the right-hand side always has to be 1. So that means we have to divide, to get to 1, we have to divide this amount by itself, right, to get to 1. So because it's a ratio, it's almost like a fraction. Well, the principle is the same, right? What you do on the right-hand side, you also have to do on the left-hand side. So if you divide by 8,047,000 on the right-hand side, you also have to divide the left-hand side by 8,047,000. So you will take your 4,828,200 and you will divide it by the 8,047,000. And then you will get an answer of 0.6. Okay, 0.6, 0.6. And guys, that is then your debt to equity ratio, 0.621, which means that your debt is 60% of your equity. Okay, and that is your final answer, guys. Please just go and write it in your answer column as well. So it's 0.621. That is your final answer for your debt to equity ratio. Okay, guys, so that was question 3. You would see that the statement of cash flow is not difficult. You just have to, guys, study all of your formats, and you have to know when things are positive or negative in terms of your balances, and then also, especially here with your cash and cash equivalents, when things are outflows and inflows as well. That's very, very important when we look at the cash flow statement, identifying outflows and inflows of cash.